In today's video, we will be diving deep into Bigbear.ai, a little known AI defense contractor that's quietly building a massive opportunity. With $165 million in army contracts, a strategic partnership with Palantir, and an explosive 27 to 28% short interest, this company is uniquely positioned in the booming defense AI sector. But beyond the headlines, Bigbear.ai has some fascinating technical strengths and also some huge growth catalysts coming up that most investors are overlooking. If you're looking for a deep, no-fluff breakdown of why Bigbear.ai could skyrocket in the coming years, let's get started and let's dive in. Most people are currently seeing AI defense companies as one big giant pile, but I believe that Bigbear.ai has some legs for the future as they have some unique technology features focusing heavily on real-time decision dominance. This is basically helping military operators analyze streaming data, for example, from multiple sources, but also helping them make immediate tactical decisions. And Palantir is obviously going to be the most common comparison, as also one of the best comparisons to the features that Bigbear is currently offering. So if we compare it to, for example, Palantir's broader data analytics platform, we can see that Bigbear is zeroing in on predictive AI models, which can forecast battlefield events, but also cyber threats before they actually happen. This proactive edge is critical in modern warfare, and is also why we're seeing such a big rise in the Palantir stock price and revenue. And I think as more players enter the field, such as Bigbear, they have potential to make large gains in the coming years as well. Bigbear is also leveraging reinforcement learning, where AI systems improve through simulations of battlefield environments, allowing their models to adapt faster than, let's say, a traditional AI. Their focus on autonomous command and control systems means they are not just analyzing data, but actively directing drones, sensors, and many other systems with minimal human input. This AI embedded decision-making loop is still in its infancy in defense, as we're seeing still Palantir develop this industry as well. But I think that it could become a standard in the next 5 to 10 years. And this is why positioning a little bit into Bigbear.ai could be a good move for future gains, as they are a pioneer in the industry. And the really big news around Bigbear, which at the time made it become a little bit more of a mainstream stock, is the announcement of the partnership with Palantir, which in my opinion isn't just a big marketing win, because obviously Palantir is a huge name, everybody's looking into it and is investing into it, so it's drawing a lot of eyeballs, but it's also creating a layered ecosystem where Bigbear could make sure that their predictive AI models feed into Palantir's broader operational platforms. And that would make sure that Bigbear is getting a unique partnership where they have high value and they can extract that value as well. And we can see a quote here which says, "We see immense opportunities to deliver more faster for customers by partnering with cutting-edge companies who can leverage Foundry as infrastructure in their offerings. Bigbear's unique AI capabilities can achieve scalable distribution across government and commercial customers alike through Apollo and Foundry. Because both platforms, so that's going to be Bigbear and Palantir, are cloud native and built to integrate, this partnership creates high switching costs for customers, making Bigbear solutions sticky and embedded deeply into defense infrastructure, which is a big win. And it also plays into what we mentioned earlier about them giving an unique value to the market, and that becomes a little bit more sticky in terms of revenue, and it will make sure that growth will happen over the long term. If we start looking at the financials, we can see that Bigbear currently has a contract backlog of $384 million as of March 31st in 2025. This amount grew roughly 30% year over year, and it signals strong pipeline momentum and an ongoing government commitment to AI modernization. And here is the hidden thing which is important to understand with this, is that Big Bear got some big contracts from the government, and oftentimes government contracts come with embedded renewal options and also multi-year phases, which is the case here, meaning that the initial contracts could multiply in value as capabilities and also the projects expand. Therefore, I think that Big Bear's revenue growth will be accelerating due to a combination of these types of contracts expanding, but also increasing adoption in the commercial sector. In commercial markets, their AI tech is helping energy firms predict equipment failures and optimize resource deployments. This is another lucrative niche where Big Bear could come in and say, hey, we have a solution to a very big problem in the industry. They are one of the only ones to offer it. Therefore, they also have pricing power, and I think it will increase their moat for the future. On the cost side, their R&D spend is increasing, but is highly focused on scalable software architecture, indicating a potential for margin expansion as the sales grow. If we take a look at cash flows, they remain negative, which is a problem in my opinion for Big Bear to step in right now, but I will be having it on the watch list because I think they will turn cash positive in the coming periods. I'm not really sure when it's gonna happen. We will have to see. Currently, the burn rate is still manageable given recent equity raises. It's also positioning the company to fund growth without dilution for the foreseeable future, which I think is a positive. So I wouldn't be worried about it, but it's certainly something to keep an eye on because the company is currently making a loss. One other thing which is getting more eyeballs on Big Bear nowadays is the high short interest amount. This is something that happened to other stocks as well, such as GameStop, if you remember that. Currently, we are seeing roughly a 30% short interest, which is very, very high. It's actually one of the highest you will find in the AI sector. The high short ratio is usually an indication of skepticism in the market, but it's also potential for rapid price appreciation if the company is beating expectations or lands new contracts. So if we ask ourselves the question, why are shorts skeptical? It's mainly because Big Bear is still unprofitable, which we just looked at, and its commercial expansion hasn't yet proven to be sustainable at scale. I think this is true. They are currently leaning a little bit more on the government contracts. Another thing to keep in mind with high short interest is that this also means that whenever this happens to a stock, it means that the stock will be very volatile and sensitive to news flow. So let's say Big Bear gets some negative news, it will react very heavily. If it has positive news, on the other hand, it will also react very heavily. So any contract wins, maybe positive earning surprises or technical upgrades could potentially trigger a short squeeze. I wouldn't bet on it, but it's something to keep in mind. Of course, if you're not comfortable with volatility, I wouldn't buy it right now, as the short interest is just super, super high. As the stock gets a little bit more mature in the future, it gets a little bit safer and it will be less volatile. Historically speaking, I think that defense AI stocks with high shorts and strong contract momentum have seen some sharp upward moves. It's not a given that it's gonna happen, but I think Big Bear is a potential candidate for a similar scenario. As we've seen, Big Bear is currently operating in a tough competitive landscape, but I think it has some important moats currently and also for the future, which they can expand upon. The first one is niche AI specialization. Unlike broad AI firms, their focus on predictive battlefield analytics and autonomous systems is very hard to replicate quickly. I would say currently it's almost impossible. There aren't also a lot of companies doing this, but that is a unique element which Big Bear has, which I'm bullish on. Then as the second point, we have embedded government relationships. This is signaled by the market because they are getting multi-year contracts from the government and also getting integrations which create long sales cycles but strong customer stickiness. Oftentimes the contracts span for 5 to 10 years, which was the case with the latest one that they got. And I think as they get more contracts like this with a stronger sales backlog, it will be easier for the company to become profitable as well. Thirdly, we have partnership leverage. This is basically signaled by the collaboration with Palantir. It's not only boosting credibility, but I think it's also good for marketing. People are being made aware what Bigbear is, what they offer, and it gives them access to shared R&D, for example, but also customer bases. So I think that's super bullish for the stock. It's the most bullish thing which happened to date for Bigbear, in my opinion. So that's obviously huge. Lastly, they have the IP portfolio. And why this is important is that Bigbear currently owns proprietary AI models, which are trained on unique government datasets where they own the IP. This is very difficult for competitors to then come in, for example, duplicate it, and also get even access to it. So that's obviously very bullish for the moat and the company as well. I think all of these factors combined create high barriers for new entrants to come in and position as a competitor to Bigbear. So I think that's one of the biggest bullish signs for me as an investor to say, hey, this company is interesting, it's upcoming, it's still making a loss, but I think it could be good in the future. So to wrap up, I am bullish on Bigbear.ai. I'm currently not buying the stock, but maybe if we see a big dip in stock price, I am interested to step in. I think it's more than just an underappreciated defense AI stock. It's a tech pioneer in real-time tactical AI. I think that's a huge market for the coming years. It's going to be huge in the future. It's going to expand in so many ways which we currently don't even know or can think about, which is kind of what AI is doing. It's backed by meaningful, long-term, multi-year government contracts, which is huge. They have great strategic partnerships with companies like Palantir, and they are also expanding their commercial footprints. I think while risks remain, mainly around profitability as we looked at and also execution a little bit, the company's unique technology, the market position and the valuation currently set it up as a potential multi-bagger for the coming years. I would say if you're bullish on AI transforming defense and want exposure to the niche, it could be a stock to add to the portfolio or your watch list. That's it for today's video. Thanks again for watching, everybody, and thanks again for the support that you've been showing me. If you found this deep dive valuable and you want to see more content like this in the future, please leave a like, subscribe to the channel, and also comment on what stocks you want me to analyze next. See you guys in the next one.